cents, 74 euro cents and 65 pence sterling.
For more on what's happening locally, we're joined by Rod North from Bourse Communications now. Rod, good morning and thanks for joining us. Look, we've been speaking for ages about these debt concerns and these debt fears, but what's new? What have the European markets discovered that they haven't known before?
Well, I think it just keeps coming back to haunt us because it just won't go away. I mean, clearly there's a crisis of confidence in both Europe and the US, and we had, some surprises on Friday, particularly in the US, where there was an expectation that there'd be 90,000 new jobs created, and of course there were no new jobs created in August, which meant that the unemployment rate stayed at 9%. In the case of Europe, we've still got all those countries dealing with their debt issues, and I think it just shows you that with a crisis of confidence in the market, the markets, react on any news, and particularly if it's not good news or if it doesn't reach the expectation that the market is expecting, we do see the market react very unfavourably. But the debt issues are not going to go away until they're dealt with.
No, indeed, but that just loops me back to my original question about the news. I mean, there's not much new news.
Well, no new news.
No, it's just a continual fear, and the market doesn't really aid the situation by allowing itself to give way to such panic or such fear.
Well, that's right, and of course, and then when you've got the market closed in the US last night as well, there's that sort of expectation of what happens as markets open today. But at the end of the day, I think you've got to look, at the bigger picture, and you've got to look particularly at how companies are performing. And in the US, for example, during their reporting season, companies performed pretty well there. In Australia, we had pretty mixed results, but there were still many companies doing very well. Right. So, we've got to look at the bigger picture, I think.
The All Ordinary's down, about 2% yesterday.
Yeah, 2.2%.
Fair to say there'll be another big fall today based on what happened in Europe.
I think the futures are showing that we'll see probably about a 1.5% decline today.
And already the Australian share market, as you note, is at a pretty steep discount to where it was pre-global financial crisis.
That's correct, because back in November 2007, the market got up to 6,800. We're now at 4,224. So we're still 40% down. So, I mean, being the optimist, you could be saying, well, there's some pretty good value in the share market at the moment, but then it's a question of when you're going to see that share market recover. And it's been a very slow sort of process, because we've seen the market rise in Australia twice back to 5,000 and then drop, just recently back down below 4. So it doesn't give, investors a lot of confidence until you see the direction going one way as opposed to going one way and then turning to go the next.
Now, the Reserve Bank Board meets today, but no one's expecting them to move.
No, they're not. And, I mean, this will be the 9th month that the Reserve Bank is likely to leave the cash rate, which is currently at 4.75%, on hold. I think of all the 25 economists surveyed, not one of them is prepared to tip that it will change beyond 4.75%. But I suppose then the question is, well, in view of what's ahead, and particularly with what happens with world markets over the next few weeks and also our own economic scene, I suppose the issue of interest rates remains on the table, for subsequent months, with still the expectation that there may be a decrease at some point.
Now, the big figure coming out this week economically are those growth numbers for, I think, the June quarter?
Yes, it's the June quarter GDP. Now, I think that will be the one good news item, and I think the government actually will be quite keen to have some good news this week.
Won't they?
The March quarter declined 1.2%. The expectation on the June quarter is that we could see an increase of 0.08 to 1.1%, which would actually be good news for the Australian economy, because it shows that since we had all those natural disasters early in the year, and that meant a lot of export couldn't occur, that's kicked back reasonably well. So a positive figure is always a good one to have.
Well, always good to see you, Rod. I guess we'll just try and hang on to our nerve and hope that the Australian share market can do the same.
Absolutely.
A rough time to ride on. Thanks, Roth.
Thank you.